Hello everyone, this is your DMV real estate market report for July of 2023. I'm Edward Slavis, team leader of the Slavis group at eXp Realty, and let's start as always with interest rates. Our source for this is Zillow. As you can see here, in the last month, rates peaked kind of closer to 7%. They are now down back to where they were, about 6.5%, where they've been for the last year. 2 days ago, the Fed released their CPI data, the Consumer Price Index data. The good news is inflation only went up about 0.2%. That's a very welcome break for us. If you listen to different experts, they all are predicting different, projections about whether or not the Fed will raise rates. Are they done? Are they going to raise it one more, two more times? The jury's out on that. Hopefully, we will see these rates continue to decrease. But as you can see, they're right now at about the 6.5 mark, where they've more or less been for the last month. As always, this is just national data on a 30-year fixed rate purchase. If you're curious about your, what rate you would get if you were to buy today, let us know. We can introduce you to one of our lenders. Now, these are new listings. Again, this is the DC metro area, not just Washington, DC proper. Somewhat disappointing here in that June, we did not see a lot of new listings. Okay, it's been fairly flat throughout the spring market. We did not get the influx of listings that we were looking for. We had fewer than in the fall, which is not the norm. Usually we'll see the most here in the spring. This is, again, these are all home types. As you can see here, the last 5 months, we've had about 35 to 45% fewer listings than in the same month that previous year. Zero is actually up here off the chart. This is from 10 to 50% here, negative 10 to negative 50% on the y-axis there. So June, again, a disappointing month. Overall, a disappointing spring in terms of number of new listings and the properties coming to the market. If you look at the closed sales, June, again, slightly higher, slow March and April, about 5,400 sales of all property types in June. And the good news is this slope, this line is sloping upwards. There were about 18% fewer homes sold in June of 2023 compared to June of 2022. That is up from about 50% fewer here in November and December. That's literally off the chart. So hopefully this line will continue to increase, and we'll follow that line in the coming months. But how is it affecting prices? I've broken it out now. The red line are detached homes, blue are all properties, and yellow are condos and co-ops. These lines look fairly flat, but it's a little deceiving because of the scale here. So if you take January of 2023, that was about 500,000. We've now had about 3 months where the median price was 600,000, so an increase of 20%. Prices are going up. Part of that is a seasonal adjustment. If we compare year over year, we can see that prices haven't actually gone down that much. For most of last year, the, again, red detached, blue all, and yellow condo co-op, those prices were actually a little bit higher in median price than in the previous year. We had a few months where it was less. In this last month, again, good news, for all three property types, or all properties detached and condos, the median prices were, about equal for all, or about 2.5% to 3% higher for detached homes and for condos. As always, 1 month does not a trend make, but hopefully we will continue to see these three lines on the plus side here of this graph, as hopefully prices continue to increase. Looking at a price per square foot, we'll see the same thing. These lines look fairly flat, but again, the scale can be a little bit deceiving down here from 300 up to above 350 for condos, for instance. Looking at it month over month, again, we're seeing a very similar shape to that previous, where higher price per square foot in median sale for the first half of the last year, a few months below, and now this last month or two, we're seeing prices sell at about 2.5% to 5% higher in a price per square foot year over year. This is, again, for the median house that's sold. Okay, if the house was listed and it didn't sell, it does not appear in this data. So homes that are selling are still selling at or above where they were a year ago. Now, days on the market. You can see in January, days on the market peaked at above 30 days. We are now back down to below 10 days. So the average home that sells across all property types throughout the DMV is still selling in 7 days or less. I think if more sellers knew this, more would feel comfortable listing in the market because there is still demand, provided that the property is fairly priced. And this is, again, year over year. We saw, for days on market, we saw upwards of 200% longer on market. And now we're back down to about the same number of days on market as we were a year ago. So again, that's a good sign. What does this mean? If you've seen my reports before, these bullets really have not changed. On the seller side, fewer homes are being listed, home sales have slowed, and inventory is slightly up. For sellers, your home will still sell. It will still sell in a week. It will still sell for the same price it would have a year ago. The difference is how you prepare and market that property, and how we showcase it, how we get it in front of buyers and negotiate on your behalf. It will still get the price that you want. Okay, the market has not collapsed. The difference is there are certain homes that simply are not going to sell because the proper preparation did not go into those. A little bit of a tongue twister there. Of course, if you're interested, give us a call, reach out. We'd love to have a private consultation to discuss your home with you. And then for buyers, I will not get tired of saying this. This is the best time in the last 10 years to be a buyer. You can pay a slightly higher rate, maybe around 6.5%, but those rates will come down in the future. We are very confident in that. Most experts predict that. You'll be able to refinance that rate over time. But you also have a lot more leverage now. So in previous markets, we would have buyers that would have to throw money at the problem or waive appraisals and financing protections and home inspections. That is not this market. It is for some properties, but overall, buyers have a lot more leverage. So if you're interested in a private consultation, a free consultation, let us know. We would love to meet with you and introduce you to one of our agents. That is your market report for July. As always, if you have any questions at all, let us know. We'd love to hear from you. Thanks and take care.